Manishi Chaudhary, as promised, joins in from BNP Paribas. Hi Manishi. First, really, the markets have added over 600 points in the Sensex since budget, and the fine print is digested. Any particular theme that you would bet on after reading the fine print, or given the current market scenario?
Actually, this particular budget, that was possibly more significant in terms of the actions that it did not take, rather than the actions that it did take. For example, I think almost all the industries were expecting some increase in excise duties, maybe from 10% to 12% on an average. Historically, we have seen that there are certain increase-prone sectors like alcohol, like tobacco. There was no increase imposed on even those susceptible sectors this time around. So that was something that the budget did not do. And as a consequence, many of these consumption-orientated sectors benefited hugely. If I come to, one of the main thrusts of the budget, which actually took the market by surprise when it was announced, which was the relatively low fiscal deficit number, 4.6% of GDP, I think gradually the market is, kind of beginning to see through that it may not be so easy to achieve. Because while the revenue growth numbers, which are, kind of in their mid-teens, they seem achievable if we do have about 14 to 15% nominal GDP growth. But the expenditure numbers clearly seem to be too aggressive. For example, there is a decline assumed in subsidies of all kinds, be it oil, fertilizer or food. And even the NREGA allocations have been assumed to be flat, which also seems rather aggressive to me. 21% earnings growth would not last. We'll possibly be down to about 17 to 18%. So that is the kind of return that you could expect from the market. So from here, which means somewhere around, my arithmetic is kind of failing me at this point, but I think somewhere around 22,000 or so, 21 to 22,000 on the Sensex. In general, if I look at the auto space, for example, because that's the sector you named, I would think that in general the consumer autos, that is passenger cars, two-wheelers, they would perhaps do better in the current scenario than the so-called investment autos, like commercial vehicles or utility vehicles and so on. So we are actually bullish on stocks like Maruti, Bajaj Auto and Mahindra & Mahindra. Hero Honda has different issues of its own. As you would have seen, the joint venture partners have split, and there has to be a whole rebranding exercise of the company. One doesn't exactly know where it is going in terms of the success of that rebranding exercise and in terms of the product launches going forward, because after a certain period of time it may not have the support of R&D that was coming in from Honda historically. So a cleaner story, no doubt, is Bajaj in that two-wheeler sector. So we are of that opinion. In fact, I would share some background with you. In early October, we downgraded the financials space to an underweight. And there are many of the leading companies on which we had underperformer recommendations at that point of time. But recently, we have upgraded that space back again to an overweight. And, that's partly a consequence of severe underperformance of the financials and banks in course of last 4 or 5 months, and partly because we see the headwinds that were affecting this sector, they're getting gradually cleared off. I mentioned the liquidity squeeze in this sector likely to clear off in the April to June period. Another issue is that gradually I think deposit growth is coming back, and it's gradually catching up with credit growth if you see the last few weeks' data. And as a consequence, the concern on net interest margins declining that we had about this sector, that's possibly, that concern is possibly getting dissipated. It may still happen over 1 quarter or so, but not really over the longer term. And consequent to that, the valuations that some of these guys are trading at, particularly the leading private sector banks like ICICI Bank, Axis Bank, etc., they do appear attractive to us. Well, that's an interesting point you raised, that there was something in the budget for the infrastructure stocks, because at least on the surface, the allocation to infrastructure was increased significantly, somewhere around 23 to 24%. But I must point out that the reason why these infra stocks underperformed so much was not financing availability. Financing availability was never so much of a problem. It was execution that was a significant problem for this sector, execution and order inflows. And these problems, which pertain to, let's say, land availability, environmental clearances, etc., we are yet to see a proper resolution of these issues. Yeah. So I think for the infrastructure stocks in general, one would have to wait and watch. But in the engineering and capital goods space, there are certain stocks, which are possibly doing better. Well, your initial part of the question, that the coalition is stable, yes, perhaps. Because, I think the ruling coalition has the numbers on its side, and therefore we are not really factoring in any expectation of any impending change in the central government or something like that. No, that's not likely to happen. Now, your second part of the question is more tricky, because is the Congress in a position to carry out policy reforms? No, we are not factoring in any expectation of any policy reforms in the near term, not in the next couple of months, because this is not really the time to think in those terms, because the attention of the ruling coalition gets diverted to many other areas when 3 or 4 state elections get bunched up together. So I think, the market would be prudent not to factor in those expectations right now, but there could be a potential for those reforms in the second half of the year.